If you invest $1,000 a month and earn a long-term average of 7%, you cross $250,000 in about 13 years. You cross $500,000 in about 20. You cross $1 million in about 28. If you increase your contribution by just 3% each year, barely noticeable, those timelines shrink. No crypto lottery, no perfect timing, just a sober plan, faithfully executed. What about picking companies? Ancient craftsmen chose the best materials. You should do the same. Look for businesses that turn $1 of capital into more than $1 of profit repeatedly. Look for moats that protect those profits. Look for leaders who treat shareholders like partners. Avoid balance sheets that wobble. Pay a fair price. Then let management compound and let time weigh the results. Day to day, the market votes. Year to year, it weighs. You don't need to win the popularity contest. You need to own what becomes heavier. A brief word on mistakes. You will make them. Everyone does. The ancient approach is to prepare for error and survive it. Keep your errors small by sizing them small. Spread your risk. Learn the lesson once. Move on. Forgive yourself faster than the market forgave your decision. Then go back to your rules. Now let's step into stress management, because money without calm is misery dressed in numbers. When volatility hits, your nervous system will want to do something. Anything. Build a when scared script. It might sound like this. Breathe. Step away from screens for 24 hours. Reread your one-page policy. Compare price action with business performance. If nothing about the business changed, do nothing. If the market offered you a discount on the same cash flows, consider adding. The point is to pre-decide. You don't rise to the occasion. You fall to the level of your preparation. Let's also talk about people. The ancients chose their circle with care. You need to do the same. Surround yourself, online and off, with long-term thinkers, builders, operators, investors who talk in decades. If your feed is a slot machine, your behavior will be too. Curate it. Your inputs shape your outputs. Now a quick, practical blueprint. No fluff, just moves. 1. Write your money creed in 60 seconds. I buy ownership, not entertainment. I let time work. I sleep well because my risk is sized right. 2. Automate a contribution that slightly stings. Enough to feel it, not enough to break you. Increase it every January by 1 or 2%. 3. Choose your core. Most people should start with a global stock index fund plus a bond fund matched to their risk. Add a quality tilt if you like. Keep costs low. Own the world. Go live your life. 4. Create a short list for individual picks. 5 to 10 names you truly understand. Track why you own each. Earnings drivers. Risks. Valuation bands. Update as facts change. If you can't explain a business to a smart teenager, pass. There will be another pitch. 5. Rebalance with rules. Once or twice a year, restore your target allocation. Harvest losses for taxes when it makes sense. Do not tinker weekly. Tinkering is the enemy of compounding. 6. Protect the downside of your real life. Insurance where it matters. A budget that leaves room for surprise. Skills that increase your earning power. Income diversification at a pace you can handle. Money is multiplied by peace of mind. 7. Celebrate boring. Boredom is not failure. It's evidence your plan is working without drama. Save excitement for your hobbies, your family, your health, your adventures. Let your portfolio be a quiet engine. If you want a single anchor to carry from this video to the rest of your financial life, take this. Philosophy first, then process, then profit. Reverse the order, and you'll spend years chasing outcomes you could have created by staying still. Modern tools are incredible. You can invest from your phone. You can read shareholder letters from a century ago. You can own a slice of the best businesses on earth for a tiny fee. But tools won't save you from bad principles. Principles make tools powerful. Tools without principles make you dangerous to yourself. So here's your action step for today. Not tomorrow. Today, write a one-page money policy. At the top, write your time horizon, 10 years or more. Under that, write your jars and your target percentages. Security, ownership, optionality. Next, write your automatic contribution and the date it will run. Then write 3 cell rules that are objective. Thesis broken. Better opportunity with similar risk. Allocation rebalance. Finally, write the 3 lines you'll read out loud in a crash. I don't sell fear. I don't buy FOMO. I will be here when this passes. Print it. Tape it near your screen. When the world gets loud, make your policy louder. Now, a closing thought to tie the ancient to the modern. Imagine your future self decades from now. Healthy, calm, free, owning assets that pay you while you sleep. That version of you doesn't thank you for predicting every twist. They thank you for being the kind of person ancient thinkers would recognize. Patient, prepared, principled. They thank you for planting trees and tending them. They thank you for choosing quality over noise, endurance over entertainment, and wisdom over impulse. Play long-term games with long-term people. Naval's words echo what builders have known for millennia. Choose your game wisely. Choose your people wisely. Then play longer than the crowd can imagine. And when you choose to own a piece of a great business, remember Buffett's compass. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Do that again and again, wrapped inside a patient plan, and the result looks like magic. It isn't magic. It's method. You have power over your mind, not outside events. Marcus Aurelius hands you the key. Use it. Control your process. Let compounding and time handle the rest. If this resonated, subscribe. Join a community that blends ancient wisdom with modern money. We build quietly. We own patiently. We think for ourselves. And we let simple, eternal principles do what they've always done: turn steady behavior into lasting fortune.